on, Grant, that's ridiculous. Luke, what are you worried about? It's some sort of zombie apocalypse? Been hearing this for hundreds of years, and you know what? These people have lost money non-stop, and they continue to lose money. 10x it, right? Because institutions that are willing to 10x your money for free with no risk, those are at every street corner, right? All right, guys, I'm gonna take some TikTok today. I'm gonna watch them. I'm gonna give you my live analysis, first take when watching some of the most popular stuff right now on TikTok.
What would it take for you to get $3 billion within 6 months?
I'd take $100 million that I have, and I'd go to a big institution and say, hey, 10x my 100. That'd be a bill. They'll do that, 100%. I'd take the bill and go buy $3 billion. $1 billion will buy $3 or $4 billion worth of real estate. We could do $4 billion this year.
I don't understand why you're thinking so small.
Come on, Grant. Okay, there's two parts to his plan. First off, he's gonna take the $100 million that he has, he's gonna take it to an institution, he's gonna 10x it. 10x it, right? Because institutions that are willing to 10x your money for free with no risk, those are at every street corner, right? Yeah, you can just walk into any place and get 10 times the return on your money. Come on, Grant, that's ridiculous. Second part of this, I'm gonna take my billion and I'm gonna buy a $4 billion property. Well, you didn't make $4 billion. Your balance sheet still says $1 billion of equity, $3 billion of loan. Your net worth remains $1 billion. So this is not making $3 or $4 billion, Grant. Both parts make no sense, but the second part is not even answering the first part to the question. You're better than this. All right, next video I'm watching.
I'm not gonna go buy Google stock. You know why? Because they don't pay a dividend every month. I'm not gonna buy AT&T stock. AT&T pays a dividend every quarter. When do they collect their payment? Every month, man. Can you imagine calling AT&T and say, dude, we want to pay you every quarter like you pay your dividends? That's how important monthly cash flow is. Do you understand that? They pay their dividends to investors every quarter. They collect checks every month. The difference between those 89 days makes them hundreds of millions of dollars. The Bank of America, Northern Trust right here, will lend me money to buy an apartment deal, but they won't lend me money to buy their own stock. Think about that.
So Grant, if you're buying a company, you own that company. Their return on shareholder equity is defined as a percentage. 10%, 12%, 15%, 20%, whatever that number is. That's the number that you should care about. Now, what the company chooses to do with those profits on an annual basis really shouldn't make a difference to you, because Google chooses to reinvest those profits in its own self. They can generate more returns with their dividend than you can. Therefore, as a shareholder, you're actually better off to let Google reinvest that dividend and compound the returns inside the company at a much higher rate than you can compound them in your bank account. So you should want to own, if you're most concerned about growth, you should want to own companies that don't pay a dividend, because they're gonna compound faster than companies who pay a dividend. Companies that pay a dividend, they're safer. You get the cash flow, you have less concerns, but that doesn't mean that the companies that don't pay a dividend are worse companies.
They will not lend me money to buy Bitcoin. They won't even lend me money to buy Bank of America stock. So what do they believe in? Cash flow, man. Any asset that generates cash flow into the future is going to be worth more money. What do I invest in? Y'all see where I'm putting all my money. That's all I talk about all the time, because I know it's going to be there.
You talk about investing in companies that generate cash flow. There are very few companies that generate the cash flow that Google generates. It generates more cash flow on a monthly basis than almost any company on the planet. So you said you only invest in companies that generate cash flow? Google has you beat. You should be less concerned about whether they pay a dividend or not, Grant, and more focused on the total return that the company is able to generate for their equity holders. That's the most important thing.
Best investment in the world today. I'm not kidding you. Better than real estate, better than oil, better than gas is silver, because this is going down. When this goes down, the rupee goes down with it. So if you want to get rich, get silver today. Best investment of all. This is $35 US. So the Japanese save all that little yen and they buy dollars, and guys like me borrow their money and we invest all over the world. Japanese are savers. That's why Japan's in trouble. They're not investors.
Okay, this variation of best investment in the world is something I can put under my mattress and is never gonna generate cash flow and is only gonna sit there and look pretty, and I'm only gonna make money if someone else pays me more for it in the future date. I've been hearing this for hundreds of years, and you know what? These people have lost money non-stop and they continue to lose money. If you want to grow your money, if you want to compound your money, focus on an asset class that is generating some sort of cash flow, whether it's stocks, with growth of the value, or dividends, whether it's fixed income that pays you a guaranteed sum, or whether it's an alternative asset class that pays you, shareholder return through real returns such as rent or a royalty of some sort. That's what you need to focus on if you want to grow your wealth. The only way you're making more money buying silver is if there's a greater fool out there that's going to pay you more for your silver than you paid for it. Do you want to bank on the fact that there's a greater fool out there that's going to pay you more? Or do you want to own something that generates return year in, year out, can compound, can increase your wealth, diversify your assets, and make you more wealthy? Don't listen to this guy.
I think the stock market is for losers. Why would you put money in the stock market when it's manipulated? That's what I think about. So I'm always watching the manipulation going on behind the scenes.
Come on, Robert. You're better than this. You know that the stock market has compounded the highest rates of return versus any other asset class that exists. You know that even with the alleged manipulation that you're talking about, that if you buy quality companies that are profitable over time, you will compound your returns at a higher rate than anything else. It's the best form of investments for the majority of Canadians. You need to own some allocation of stocks in your portfolio in order to optimize your return. Where have you been in the last 20 years if you haven't been invested in stocks? How have you generated returns, Robert? I'd love to hear that, because you know what's compounding and making new all-time highs every single decade of every single century over the last 200 years? It's the stock market. Yes, there might be a little bit of manipulation. Yes, from time to time, there might be criminals just like there are in every other industry. But the fact remains that if you own quality, if you have a portfolio manager that you trust that's doing his or her job and making sure that you're optimizing your wealth, you will compound at a faster rate, and it's much better than leaving your money under your mattress in silver. Be better than this.
Basket of assets that's very reliable is 1 kilo of gold, 1 kilo of silver. You're going to have 10,000 Swiss francs because Switzerland is the banking capital of the world. You're going to have 10,000 US dollars because the United States is the military superpower of the world. And you're going to have 10,000 Singaporean dollars because Singaporean dollars are the least inflated currency, and have some Bitcoin. And I think that's a good basket of assets if World War III hits.
Don't leave it here.
Bro. These don't know shit.
Luke, what are you worried about? Some sort of zombie apocalypse? Why on earth would you choose to keep real assets such as gold, silver, Bitcoin, dollars under your mattress, I guess, or in a safe, not in a bank? You really think that's safer to have than a regulated financial institution that guarantees your capital and that makes sure that should fraud or something happen to your bank, that those assets are covered? Seriously, what happens if someone breaks into your house and takes that gold bar under your mattress, or takes the 10,000 Singapore dollars that you've got? That money is gone, that money is lost. There's no regulation, there's no way for you to recover that. Think of all the hundreds of thousands of people that have lost all their wealth in Bitcoin, or have been robbed of their gold, or have had their capital eroded. You need to have a portfolio that generates returns. If you're going to sit on this wealth as passive investments, as passive income, you want this to basically be a basket of goods, basket of alternative investments, you need to have that money invested. Think of 3 asset classes. Have some in stocks, have some in fixed income, have some in alternative or real assets. Don't be crazy and sit on a whole bunch of money in a safe somewhere under your mattress. That's foolish. World War I has happened, World War II has happened. They decimated entire countries' populations, and yet you know what continued to happen? Corporations made money. Companies were profitable throughout the 50s, 60s, 70s, and the stock market made all-time new highs, right? Yes, a lot of people died, and yes, a lot of people would die in World War III, but if you have wealth and you want that money invested properly, a World War III will not completely unravel your portfolio. It's happened before, it'll happen again. Companies are profitable. Capitalism works.
Buy a Vanguard no load S&P 500 and hold it and don't ever sell it. Sad to say, but like at the end of the day, unless you're a professional investor that's on it every second and like you just really know what you're doing, it's been proven. Even that most successful hedge fund managers can't beat the S&P over the long term.
Jordan, the Wolf of Wall Street, you make a good point with respect to beating the S&P, but that's not the only reason why you should diversify. First off, different asset classes. You need to own more than just US stocks. Second of all, diversify across different sectors, and you want to be able to pick and sell the ones you can and need to at different times for tax purposes. Owning one holding, such as the S&P 500, doesn't allow you to sell winners or losers depending on your situation. Jordan, you're making some huge assumptions here. You're assuming that anyone who's watching this TikTok video can stomach the volatility of 40, 50% market swings that will happen if you own the S&P 500 ETF. Not everyone can handle that. In fact, most people cannot. You say, just close your eyes, don't worry about it, never sell it. You're removing emotion from the process when you know that most North Americans are not able to do that. All right, work with an advisor, build a portfolio, have some asset allocation, reduce your volatility, think about tax. These are all things that the S&P ETF cannot do for you. This doesn't work.